Is CIBC the best bank for a mortgage? Well, the truth is, it depends on what you value most and how much you're willing to give up for convenience. Hey, I'm Jarrett White, a Canadian mortgage broker here in BC, and I've helped hundreds of families make smarter mortgage decisions. And my goal with these videos is to help you understand each bank's strengths and weaknesses, not to sway you, but to help you make an informed decision. Now, just like RBC, CIBC doesn't work with mortgage brokers. That means if you want to deal with them, you're dealing with them directly and you're getting advice from an employee of the bank, not an independent advisor, such as myself, a mortgage professional, who can compare multiple lenders for you. But to keep this fair, let's start with what CIBC actually does pretty well. One area where CIBC stands out is their Newcomer mortgage program. If you're new to Canada and don't yet have an established credit history, CIBC is one of the few big banks that will still want to work with you. They have flexible payment options for permanent residents, newcomers, and even temporary workers on valid work permits. For someone just starting to build a financial life in Canada, that's a huge advantage. Another strong feature is CIBC's Home Power Plan, which combines a mortgage and a home equity line of credit into one product. Many other banks have this though. As you pay down your mortgage, your available credit automatically increases. It's convenient if you plan to use your home equity later for renovations, investments, or have large expenses coming up. Lastly, CIBC offers what they call a variable flex mortgage, which lets you prepay up to 20% of your original balance each year and even double your monthly payments. That's a solid prepayment privilege as long as you choose the right product to use it for. So yes, CIBC does have some useful features, but now let's talk about what's not so great, the things most clients don't realize until it's typically too late. First off, unless you specifically chose that flex product, CIBC's regular mortgages only allow 10% lump sum payments per year. That's among the lowest of all the major banks. Scotia, TD, and even BMO all allow 15 to 20%. And if you want to pay your mortgage down faster, or even reduce your penalty if you break it early, that limited prepayment privilege structure can really hurt your flexibility. Speaking of penalties, CIBCs are some of the highest in the industry if you break a fixed rate mortgage early. They calculate their penalty based on what's called the interest rate differential, or IRD, and they base that calculation off of their posted rates, not the discounted rate that you actually received. The difference is thousands, sometimes tens of thousands of dollars in fees and penalties. And if you need a refinance, move on, break your mortgage early, that could easily cost you 5 figures, no doubt. Now let's talk about something sneaky. It's how they calculate the interest on their variable rate mortgages. CIBC compounds their variable rate mortgages monthly, while others compound semi-annually. It sounds like a small difference, but in the life of mortgages, that monthly compounding means you're paying higher interest. So you might actually have a lower rate with CIBC, but paying the same amount as someone with a higher rate on another bank. Another thing to be cautious about is their cashback mortgages. These are popular because CIBC will give you a lump sum of cash up front when you close. Now this can sometimes be 1 or even 2% of the entire mortgage amount, but here's the catch. If you break your mortgage early, you're not only going to pay your penalty, but you're paying that entire cashback amount as well, back to the lender. Now, they do give you a higher rate for taking this cash back, so you're kind of taking the hit up front, and then if you break your mortgage early, you're giving that cash rate back to them, and now you're just in a worse off position to begin with. CIBC also doesn't exactly make it easy to switch lenders at renewal. Their Home Power Plan, the one that combines the mortgage and home equity line of credit, it's registered as a collateral charge, meaning you can't simply transfer it to another lender at renewal. You'd have to pay a legal fee to discharge and recharge another mortgage. So once you're in, you're pretty much locked in unless you want to pay anywhere between a $750 and $1,200 fee to discharge and register a new mortgage. That usually cuts out any interest savings from switching to other banks. Now, the last thing is, because you're working directly with CIBC, you are going to get that unbiased advice. They are not required to advise you on the mortgage products. They're simply there to sell their own products. You're also going to be limited to the banking hours of 9 to 5, and if something happens after hours or on the weekend that's urgent, it's annoying not being able to get a hold of them. Now, to be fair, there are a few situations where choosing CIBC might still make sense. For instance, if you were a newcomer to Canada and need a bank that will work with limited credit history, they're actually one of the better choices. Or if you plan to use your home equity frequently, for example, to invest, renovate, or consolidate debt, their Home Power Plan might still suit your needs. But like I said, lots of other banks have a similar style product. But for most borrowers, the trade-offs outweigh the benefits, in my opinion. And between the high penalties, limited prepayment options, tricky cashback conditions, and restrictive collateral charges, CIBC mortgages can end up costing you more in the long run, especially if life changes and you need more flexibility. So is CIBC the best bank for a mortgage? If you're a newcomer or you love the idea of an all-in-one mortgage and line of credit option, then maybe. But for most Canadians, there are far better, more flexible options available through other lenders. And remember, a mortgage isn't just about the rate, it's about the structure, the penalties, the flexibility, and having someone in your corner who's comparing all of those details for you. And that's exactly what I do as your mortgage broker. I work with dozens of lenders across Canada, including the ones that usually beat CIBC on flexibility, cost, and service. So if you're buying, refinancing, or renewing, book a free consultation using the link in the description, and let's make sure you're not just getting a mortgage, but the right mortgage for your future. If this breakdown helped, hit that like button, subscribe to the channel, and ring the bell to be notified. I'm going to be posting many more Canadian mortgage insights on this channel, along with many other lender reviews other than just the major banks. We're going to dive into the mortgage finance companies, credit unions, etc. My goal is to have one of these style videos for every single lender that you have access to. Thanks a lot for watching. Talk soon.